Did you know that real estate investing can be a gold mine? Not just in profits, but in tax savings too. Welcome to our clear and concise guide on the tax benefits of real estate investing. This isn't just about buying property. It's about smart strategies to keep more money in your pocket. Today, we're going to unveil how savvy investors use real estate to reduce their tax bills significantly. From simple deductions to complex loopholes, we'll make it easy to understand. Our video is packed with essential tips and tricks, and we have a special gift for our viewers at the end of this video. So, watch the full video. But before starting the video, if you are new on our channel, hit the subscribe button and turn on the notification to get more taxes and accounting videos. Depreciation benefits. Depreciation in real estate is a tax benefit, allowing investors to deduct the costs of buying and improving a property over its useful life, typically 27.5 years for residential property. For example, if you buy a rental property for $275,000, excluding the land value, you can deduct $10,000 yearly, $275,000 divided by 27.5. This deduction directly reduces your taxable income, potentially saving thousands in taxes annually. To maximize this, investors should keep detailed records of acquisition costs and improvements. The IRS requires a specific calculation method, so it's crucial to consult with a tax professional to accurately apply these deductions. 1031. Exchange. The 1031 exchange, named after Section 1031 of the IRS Code, allows real estate investors to defer capital gains tax when they sell a property and reinvest the proceeds in a like-kind property. For instance, if you sell a rental property for $300,000 that was originally purchased for $200,000, normally you'd owe taxes on the $100,000 gain. However, by using a 1031 exchange, you can reinvest that $300,000 into another property, deferring all capital gains taxes. To successfully execute this, strict timelines must be followed. Identify the new property within 45 days and complete the purchase within 180 days. Consulting a tax advisor or 1031 exchange specialist is essential to ensure compliance and maximize benefits. Mortgage interest deductions. Mortgage interest deductions offer significant tax relief for real estate investors. This provision allows you to deduct the interest paid on your mortgage from your taxable income. For example, if you pay $15,000 in mortgage interest annually on a rental property, you can deduct that entire amount from your taxable income, potentially lowering your tax bill. This is especially beneficial in the early years of a mortgage when interest payments are higher. To capitalize on this, ensure you're meticulously tracking and documenting all interest payments. Remember, this deduction applies to loans up to $750,000 for properties purchased after December 15, 2017. Capital Gains Exclusions. Capital gains exclusions provide a significant tax advantage for homeowners. When you sell your primary residence, you can exclude up to $250,000 of the capital gain from your income if you're single, or $500,000 if married filing jointly. For example, if you purchased your home for $300,000 and sell it for $800,000, as a single homeowner, you're only taxed on $250,000 of the $500,000 gain. To qualify, you must have lived in the home for at least 2 of the last 5 years. This exclusion can be used repeatedly, but only once every 2 years, making strategic timing crucial. Rental income tax advantages. Rental income tax advantages are a key benefit of real estate investing. Apart from the actual rental income, numerous associated expenses are tax deductible. For example, if your rental property generates $24,000 annually, and you have expenses like $5,000 in mortgage interest, $2,000 in property taxes, $1,000 in maintenance, and $500 in advertising, these can be deducted from your rental income. This means, out of your $24,000 income, $8,500 is offset by expenses, reducing your taxable rental income to $15,500. Additionally, you can claim depreciation on the property, further decreasing your taxable income. Keeping accurate records of all expenses is crucial for maximizing these tax benefits. Pass-through deductions and business entity structures. Pass-through deductions, introduced by the Tax Cuts and Jobs Act, allow owners of certain business entities like LLCs, S corporations, and sole proprietorships to deduct up to 20% of their business income. For instance, if your LLC generates $100,000 in profit from rental activities, you could potentially deduct $20,000 before personal income tax applies. This deduction is available whether or not you itemize. Choosing the right business entity is crucial. Each has unique tax implications. LLCs offer flexibility and protection with fewer formalities, while S corporations can provide salary options for tax savings. Consult a tax professional to determine the best structure for your real estate investments. Real estate professional status. Real estate professional status, or REPS, offers significant tax advantages under IRS rules. To qualify, you must spend more than 50% of your working hours and at least 750 hours per year in real estate activities. For example, if you're a full-time real estate agent or property manager, you likely meet these criteria. This status allows you to deduct all rental property losses against other income, a benefit not available to passive investors. Say you have $20,000 in rental losses and qualify as a real estate professional. You can offset this against your other income, reducing your overall tax liability. Always maintain detailed records of your time to substantiate your status. As we wrap up, remember that real estate investing offers a landscape rich with tax benefits, from depreciation to 1031 exchanges. These strategies can significantly enhance your financial portfolio, but it's crucial to navigate these waters with knowledge and care. And here's a special gift for our viewers. We're offering a free consultation call with our expert tax professionals. Just check the link in the video description to book your call. This is our way of saying thank you for being part of our community. Stay informed, stay savvy, and let's continue to grow together in the world of real estate investing.